The lion has rolled, the bells have rang. We are talking about 61.8 billion profit after tax. That is KCB. I want to unpack the numbers with the group CEO, Paul Russo, to understand the drivers behind it. What's the outlook in 2025 and much more. They deserve their flowers, don't they? Let's get to the conversation. Welcome to the show.
Thank you. Thank you for having me.
Well done. I must say that. Was this expected? How are you feeling about it? And maybe you could mention one or two key drivers to these commendable numbers.
No, thank you. I think what I would say is one, from 2022, when I took over, we had a plan with the team. But and acknowledging it was a transitionary period, as I had explained in your show in the past. But if you look at our numbers, the top line was always growing.
Absolutely.
But we took hard decisions in 2022 and 2023 to clean up. Now, we were very clear that we will get better numbers out. But I have an amazing team, so that believes it's doable and it's sheer hard work.
Absolutely.
Yeah.
Now, 2024 was not in any way void of all these macro things that hit you hard, from currency, interest rates are here, all those kind of things. I don't know, from your own array, what was the most significant one? And maybe you could say some of the ones that probably were things that were keeping you awake in your team and how you navigated them.
I think what keeps me awake and still does keep me awake is the NPL and the stock that I've written down. So if you see the 225 billion, that keeps me awake. But the good news is we know the stock. We've taken the hard decision. It's the first time that you can say we've taken the hard decision. In fact, part of that increase, if I may just point out, is actually names that are performing. Within a group, you have 4 companies. 3 are performing very well. 1 struggles. You have to downgrade the entire group, isn't it?
Absolutely.
Because of the obliga and a related entity, isn't it? So, and it doesn't reflect. That's why it doesn't injure the performance of the institution. So that bit keeps me awake. Geopolitics keeps me awake.
Absolutely. And there's still a lot more. We have Trump already here.
So you've got Trump in. You've got what is going in Russia, Ukraine, that we've known. But you've got next door. So 15 of our branches have not opened up in DRC for the last 2 months.
Because of the situation.
Because of the situation in there. We see a bit of teeth in South Sudan. You've seen the impact of hyperinflation.
Absolutely.
South Sudan had one of their best year, but written off to 250 million shillings because of the hyperinflation. I foresee Burundi going into hyperinflation in 2025. So a bit of that keeps me awake. But like I said to my staff, everything that happens creates opportunities.
I love that.
So there are opportunities within that setup. And I'm therefore saying we will ride the tide.
I love that. So I was listening to your chair, I also listened to your CFO and you as well speaking. And you have decided to make 2024 a base sort of a meter for you now. And so the question still is sustainability on that, but also comment, because I also noted that your FX revenues were really good. I mean, you hit way over 60% plus. What's your comment on that, especially on sustainability and that?
I think, look, we took 2022, 2023 to clean up.
Good.
That is why 2024 is the right base. And it's the beginning of our 3-year strategy of 2024, 2026. So it's actually right to call it the base. So there'll be very little excuse of we wrote down sins of our forefathers and so forth. The second bit is you've got to, like I said, even if there's no volatility on the currency, there are a number of other opportunities for Treasury to push it forward. And here is, I think if I said that I would have been fired if G2G did not work, I'll be understating it. But we've got to take opportunities as they come. And And therefore, I believe the Treasury, have got opportunities, and we've seen how they're maximizing it already. The shilling has been fairly stable, right?
Yeah, you're right.
But I joke with them. I say that the A students, they think fast and they can do a lot more. So I think they will cover the gap from the trading desk. But we also brought in a group treasurer who is now strengthened trading desks across the group.
Yeah.
So I see other subsidiaries making more contribution than KCB Kenya, not in absolute number, but in terms of year-on-year movement, right?
Yeah.
So overall, I'm bullish about 2025. But like what we've seen,
yes,
it's not as predictable. I was joking with the board that in November, December, we approved the strategy for 2025. And now you have to think about what am I going to do with DRC, what am I going to do with South Sudan.
Yeah.
But KCB Kenya has momentum. KCB Tanzania has momentum.
Yeah.
Rwanda, Uganda. Those are just two markets to go and ride the ones that cover your back. Yeah.
So, Bonapol, I listened to you as well speak in a very hearty way about your customers. And of course, also the fact that even in your outlook, customers are going to be key and very key, especially in your goal. But I want to come back to looking at your NPLs, which you've mentioned, that has kept you awake. But that also, not just look at the number that is in the double digits, but just to look at the reason behind it. And I heard you speak and say, yes, we have struggling customers, struggling sectors and all that. However, you went ahead to say that you have your way in which you're dealing with this, which is what I wanted the viewers and the shareholders to hear as well. Because you said, I remember the one sentence is that come with clean hands. So it's clean hands to discuss what? Those three parts that you say.
So, and thanks for raising that. So, at the end of the day, that is idle capital, isn't it?
Yeah.
Those are funds you can't trade with, isn't it?
Yeah.
It's locked.
Yeah.
You've taken the hit. You've got to ask yourself, so if I go into asset realization, I'm going to spend time in court. Markets in some instances are not ready and don't have buyers. But some of them are actually very good business models. Maybe their cash flows were impacted. You've got to restructure.
Yeah.
You've got to take a long-term view about those businesses.
Yeah.
Right? And based on facts. For some of them, you have to help them get new investors.
Yeah.
That's why KCB Asset Investment Bank is there.
Okay.
To get other parties to come in. You have to work with them. For some, they want to reduce debt. They want to sell other assets. You've got to bring entities like KCB Mortgages to help them to sell. Because they're struggling in their own ways.
True that.
And I think if we apply all those strategies, we'll be able to resolve some of them. Some of them went to court a while back.
Yeah.
We've got to revisit why did they go to court.
Why did you go?
But I'll say something very interesting.
Yeah.
Most of these people also don't want to be left naked. So you're going to sell everything. And then I go to zero.
Yes.
It's a hard work question coming from a banker, right?
Absolutely. Yeah.
So you've got to go back to the table, isn't it? Because I built all I built.
Yeah.
Something went wrong.
Yeah.
Maybe I made a foolish decision sometimes. Market turned on me.
Yeah.
You want to sell and leave me naked? Therefore, I'll go to court.
Okay.
But there must be a way to have a conversation.
Absolutely. Absolutely.
And I mean it. There must be ways to have that conversation.
Speaking on the same, because once you're here, Paul, once we're talking about such profits and the fact that you bear also a name that has our country on it, so people will sit and say, wow, great numbers. And I love when we're talking about the ESG and the number of employment you've created for the young people. I would want you to speak today. I know we could always analyze numbers, but for today, I would want the Kenyans, customers who come and deposit their 200, 2,000 shillings with your accounts, I'd want them to feel the impact of how such profits are reaching down to the ground.
No, it's very important. I think if you look at absolute employment that we've created, it's probably 60,000 or thereabout, if I remember the number correctly.
Yeah.
direct employment that we've created working with the KCB Foundation. If you look at the number of students we sponsor, 1,272 thereabout, if I remember the number correctly. Cumulative around just shy of 6,000. And we sponsor from, secondary to university. If you go to Ivy League, we will. If you don't get scholarship, we'll fund.
Wow.
But the most important bit around that is even how we get these candidates. Our branches locally go to their homes. To confirm the situation for those.
Wow.
And therefore, we can confidently say they are truly the needy kids from students from those areas. But also we're saying, but we've got to get out and build skills. That's why our Tujiajiri program is a flagship. Because we've got, kids that came out of secondary school. They are looking for a way out. They might not have school fees. They want to use their hands, brains to do something, whether it's in hairdressing, electrical, mechanical. We run that. But what is actually amazing about it is we are using and utilizing the underutilized technical training colleges across the country. We've signed partnership with counties so that they contribute to that. You've got to step out and say, and this makes me almost go back and touch on the G2G. KCB cannot stand on the sidelines, given the heritage. We cannot.
You cannot.
A bit of risk, but we have competent risk resources in the organization. Right? We'll make that available. We've got competent boards, committees that evaluate this. We couldn't just stay on the sidelines when we couldn't buy fuel without dollars. And I'm sitting here today. And I'm glad that we took that step. We are now fighting to defend the 70% market share. We were 100%. I would bet analysts and everyone else had written some of us off.
Absolutely.
Because of our heritage, we can never be careless.
You cannot,
We can never do the wrong. Because we are just entrusted for this period. So you just expected to do two things. Lift people, deliver returns for shareholders.
Absolutely.
The balance scorecard is that simple. And when you talk about people, you talk about customers and our colleagues and all other stakeholders, the communities. The shareholder is the shareholder. They put in money, they expect a certain level of returns.
Absolutely. You're right. You cannot sit on the sidelines, especially based on that heritage. Let's come to your many varied ways in which I have seen the contribution to the net profits really has also come from some of your diversification. I'm talking about digital innovation and 1.1 billion daily digital lending. That's big. What do you deduce out of this, and what's your sentiments on it?
No, I think at the end of the day, first let's agree. Big ticket loans come with their own complexities and come with their own risks. The best way I always say is when one tall tree falls, it goes with a number of trees in that forest.
Absolutely.
And that's what is happening with our corporate book, right? So you have to get smaller tickets and churn high volumes. And that was actually the discussion. To say we've got to do something different. But I'm from the human capital point of view. So IT will never do that on their own.
They cannot.
And a digital financial services team will never do it on their own. So we actually created agile teams. Completely. Close to 450 staff. Now we're getting products and adjustments out in the shortest TAT KCB has ever. So if we continue to do that, so there's improving on what is there. There is availability of systems for that purpose. And then there is innovation on the back of that. then it should be fine.
I have a question to you on that. Do you foresee a moment where a customer will not have to walk into a bank to probably explain this based on your risk portfolio that you have seen over the time probably and the lending? Do you foresee that moment where you might end up giving big tickets still on that?
It will take a long time.
Okay.
So I think we are still largely cash economies.
Okay.
It will take a while, but both will coexist and both will grow.
Okay.
At the end of the day, a corporate is a corporate. How you evaluate a corporate?
Yeah.
And there's no standard way to evaluate all corporates.
Yeah, you're right.
But I can assign individuals certain parameters, isn't it?
Yeah.
And it's easier to do that, right?
Yeah.
So I think both will coexist. Both will grow, but risk management will become more important than ever before.
Well noted. As we come to a close, Paul, you must as well comment. You're a big boy when we say that on the table when it comes to matters dealing with regulatory affairs. I'm talking about CBK and what they're doing. And you have said today that you're on the table just having a conversation about what you had proposed as banks, the risk-based pricing. And I just wanted to ask you, I have had sentiments that yes, you may want to reevaluate it, but what's informing this? I just wanted to see the background behind this so we can appreciate it.
Yeah. So I think if we take a step back, risk-based pricing came into the fore because of two things.
Yeah.
One was largely transparency on loan pricing.
Yeah.
And that's why interest rate capping came in.
Yeah.
Because the public felt that banks were not sensitive in how we were pricing that. But then we agree that all customers are not the same.
Yeah.
So we then say we have to price based on risk. Within each institution has a different risk framework.
Yeah.
It's simple. Our cost of funds will be different from another bank's cost of funds, isn't it? Our NPLs and losses are not the same as somebody else's. The profile of the customers we have.
Yeah.
And therefore, parties build models.
Yeah.
And all of us have very good credit risk resources, built models that then we evaluated together with central bank, and you then get an approval to go with that model.
Okay.
And it answered the question, in my opinion, on transparency.
Okay.
And to be honest, it was working.
Okay.
But then, you don't notice in high interest rate regimes, when rates start coming down, monetary policy decisions are made. The expectation, and rightly so, is that you transmit that.
Yeah.
But there are so many parameters that then there is a lag. Because remember, there is deposit rates. By the time you adjust customer fixed deposit rates, there is a tenor.
Something else.
Isn't it?
Yes.
So your cost of funds is high, is not adjusting because you have a tenor with the fixed deposit.
That's true.
So it takes a little longer to unwind that position for you to be able to transmit and pass it on to.
I see it.
But then sitting and doing nothing is not an option.
It's not.
And I think we all agree that we must do something.
Yeah.
And therefore, you've got to say, how do we ensure that when monetary policy positions are taken, we just are not fast to increase rates, but we also are fast to
lower them as well when it's needed.
And as a matter of fact, I have to comply to the approved risk-based pricing model.
Yeah.
Isn't it?
Yeah. Which has a window. Yeah.
Right? So we then have to review that and put in something in place without losing the benefit of transparency.
Yeah.
Because we have to keep the benefit of transparency in pricing. So that's now the point. And it's a long way to explain to you. But in a layman's point of view, that's what we're doing. So it's not CBK instructing you to lower, which is not the case. I know it's reported that way. It's not the case. We all believe we must pass that benefit to the customers.
Yeah.
But then you need to address the framework that is approved that exists.
Yeah.
And therefore, jointly, we are saying there must be a different way. Do we adopt the same base rate? Because today, there are as many as 40 plus base rates, right?
Yeah.
And the technical team has done its work.
Yeah.
And I'm very confident we will get a position.
Excellent. Finally, to the shareholders, you have proposed to give them some dividends. I would like you to speak on it. Yeah,
so half year we made a decision, the board made a decision of 1 shilling and 50s. And this end year, the board has approved another additional 1 shilling and 50 cents. That brings us to almost 10 billion payout.
Wow.
And I think the most important question is, are we going to see that going? And as I said to investors the last time, we needed to make that decision of not paying dividend as a one-off because we needed to take care of KCB Kenya, given the downgrades.
Yeah.
And I'm glad that investors stayed on with me. You remember our share price went to 15 shillings.
I know, I remember. It was way down.
I was not sleeping.
Yes.
And they gave us a benefit of doubt because they could see then the numbers. So I'm positive that, and given the commitment from the team, that we will continue on that trajectory.
Excellent. I had gazillions of questions, but I think you've given me the overall picture, which is very good. But I must end by the baseline. Congratulations. These are great numbers. We have not seen this before.
Thank you. Thank you. Thank you.
There you have it. That's Paul Russo, Group CEO, very optimistic as well, and saying we have just set the mark. Wait and see. We can't wait as well to see. This is the Trading Bell. I leave you now with the markets.